Guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm currently monitoring. This trade idea is or does relate to the Nasdaq 100 index, which is currently probing a key area of long-term resistance, and it's looking very good technically. I think the fundamentals are probably there for a push higher as well. We'll get into that in a minute, but yeah, I mean, first let's talk about the technicals. Let's zoom in a little bit. I've got the Nasdaq here. Well, this is a CFD that tracks the price of the Nasdaq 100 futures, front month futures, and you can see here it's pretty much at its highest of the level of the year, around 2,850. It's testing those previous yearly highs, which we printed back in early February, and actually we did just about get above those highs yesterday. Yesterday was very choppy. It was the Fed meeting. The Fed raised interest rates by 25 basis points as expected, but softened the tone of their language on the outlook for further interest rate hikes. The dot plot was a little bit more dovish than expected, and it's really got markets betting now that the end of the hiking cycle may already be here. There's maybe a 50%, or it's like a coin flip as to whether the Fed's going to do another rate hike. But what markets are very confident about at this point is that a cutting cycle is just around the corner. Why? Well, we're having these troubles in the bank sector, which are likely to, or which basically make a recession even more likely. And there's this interesting thing which everyone's been talking about today, which is one of the metrics that Fed Chair Powell has said that investors should watch, which is the difference between the expected 3-month Treasury bill rate in 18 months' time compared to the current Fed interest rate. And that just fell to a record low, actually. It just surpassed the January 2001 low. And Powell basically said in the past that this is basically his favorite part of the yield curve to watch, as an indicator of, you know, whether there's going to be a recession soon. So this is pretty much confirming that there's going to be a recession soon, and then that the Fed's going to be cutting interest rates. So, you know, we're seeing these moves. Let's look at the 2-year yield. 2-year yield, 3.9%. Looks like it's probably going to continue trending to the downside. I mean, it's very choppy at the moment, but if it can break substantially below this 200-day moving average here, around 4%, which it looks like it has, it's probably going to keep trending to the downside as we move towards pricing in more this cutting cycle. Same with the 10-year yield. 10-year yield is very much at risk of falling below these recent lows in the 3.3 area and perhaps on towards 3%. And these big tech stocks, which make up the bulk of the Nasdaq 100, they love it when interest rates are lower. Why? Well, the Nasdaq is made up of stocks which their valuation is much more based upon expectations for future earning growth, not current earnings growth. Now that means the valuation of these stocks is pretty much more exposed to changes in the opportunity cost or the risk-free rate, which is pretty much what these 10 and 2-year bond yields are. So that's why they like it when bond yields are falling. Now, anyway, I know I said I was going to talk about the technicals first, but I actually talked about the fundamentals first. So let's talk about the technicals. We were in this little short-term downtrend since early February. We broke above that earlier this month, despite all the banking troubles. You got to bear in mind that actually these tech stocks, especially the big ones like Amazon, Apple, other ones like that, Google, they're kind of seen as a bit of a safe haven, because even when the economy is doing badly, they're still expected to do fairly well because they're just such key parts of the economy at this point. But anyway, yeah, we had this push higher above the downtrend. All of the major moving averages are pointing to the upside. We had the golden cross recently as well on the 8th of March, or the 7th of March, whatever day that was, where the 50-day moving average went above the 200-day moving average. And now we're testing this key area of resistance. It's a high here from September. It's a high here from last June. You know, so it was good area of support, term resistance. It was the high of the year. It also coincides with the 38.2% retracement back from last year's low to the record high. And I'm thinking that a break above this area would, I mean, your first target would be this next resistance level in the 13,200 area. but ultimately I would be looking for a retest of the recent highs. Well, a retest of the 50% fib retracement back to the all-time high, and then potentially this August 2022 high. Now, whereabouts is that? That is about 3,740 or roughly in that region. That's where I'm thinking this can go if we get this break higher, if yields keep falling. You've seen the dollar declining as well, actually. Just bring up the dollar. Looks like it's going to continue trending lower and probably hit fresh lows for the year. Now, it could be bumpy, of course, if bank stocks, which have been doing well today, but if they start doing badly again, because remember what Yellen said yesterday, US Treasury Secretary Janet Yellen, ex-Fed chairwoman, she pushed back against the idea that the US government is going to insure all deposits in the entire US, which triggered some concerns at the time, actually did weigh on the Nasdaq at the time. So there's always a risk that that these stocks have a bit of a hiccup on bank crisis concerns. But like I say, this Nasdaq index more focused on things like yields, easing financial conditions, the outlook for Fed rate cuts getting better and better and better. And yeah, that's why I think it can move higher, challenge those August highs. But yeah, guys, hope you all enjoyed the video. Hope you all found it informative, and I will see you all in the next one.